Okay, guys, so I'm just going to be showing you my near, mid, and long term analysis for a few of the stock market indexes that I'm watching. So, first, let's look at the crypto dashboard. So, as you can see, it's greed right now. So, I would be very careful buying heavily into the crypto market. Same thing into the stock market. It's like the saying of Warren Buffett, be fearful when everybody's greedy, but be greedy when everybody's fearful. So, if you had bought when it went down to the extreme fear, or every time it goes to extreme fear, then you'd probably be highly profitable right now. Same thing with the crypto market. If you had bought whenever it hit fear, extreme fear, so down here, you always want to buy somewhere down here, then you'd be highly profitable as well. So let's go to Dow Jones right now. So Dow Jones, what I'm seeing for Dow Jones, this is the 6 month chart right here. Is if we can't break past 34,518, I would assume we would not be able to hit the previous top of 36,203. That means we would probably retest previous lows, so possibly as low as 29,704. And if we break below that, the next target would most likely be the COVID-19 bottom right here, because that's also where it kind of has some support, because we were kind of hovering around 24,649 since July 3, 2017, till we had that breakout to the upside on January 2, 2019. But if we don't bounce from that, the next support that we could be looking at could be the January 2, 2015 and till January 4, 2016 top, and breaking below that would send us all the way back to the triple top. The dot-com bubble top, the housing market financial crisis top, and then the January 2, 2013 breakout to the upside top. And then the next thing that I wanted to show you is the Nasdaq. So Nasdaq is looking pretty good right now, because if you take a look here, this is a 6 month chart we're looking at. So mainly long term right now that we're looking. We just want to get the general trend of the stock market right now. So that's why we're looking at the 6 month chart. But later I will try to lay out what's going on in the near term. So we're gonna zoom in even further. So, anyways, looks like Nasdaq. You compare it to the last 6 month candlestick. This green candlestick it's showing right now is looking pretty bullish. So I would not be surprised if it keeps going up higher. Um, Up to 14,481 on July 3, 2023. So if we could reach that by July 3, 2023, I would probably take profits and assume that it would probably retest previous low, such as the 12,884. And if it cannot bounce from that sometime this year, then it would probably retest um, lower support, which right now is looking like the major critical support in the long term would be 11,073.52. But if it keeps going down, I should say major support we really have would probably be right here. So the 2000 dot-com bubble top, followed by the breakout right here. So July 1, 2013 is when we had the breakout to the upside, um, finally getting out of the dot-com bubble top. It took us like 13 years to get out of that. Keep that in mind, guys. So, okay, the next thing I want to look at and show you is S&P 500. This is also another good one, because S&P, Nasdaq, um, if you're wondering where the crypto market could be headed, um, looking at these stock market indexes, or if you're wondering where some tech stocks that you may have could be headed, these two are my main indicators, or they are a good um, these two, S&P 500 and Nasdaq, are my main source or the general direction of my tech stock picks or crypto picks. Aside from Bitcoin yeah, to the to tends to follow uh, these stock market indexes as well. So if S&P 500 or Nasdaq aren't doing so well, then you'd notice that Bitcoin isn't doing so well as well. So if you take a look here, Nasdaq is down 0.55% today. If you look at Bitcoin, it is also down by like 0.50% today as well. So um, they do have their correlation. So let's get back here to Nasdaq. I mean S&P 500. So S&P 500 looking like starting to pull back. We're still looking at the 6 month chart, and I could see it going as high as 42.77 in the near midterm. But if it doesn't break above that and go to as high as 47.69, which was the July 1, 2021 top, then I could see that trying to go as low as 36.39. But if that can't hold, then it's probably going to go lower. I could see it going as low as the um, January 2, 2020 top, which was the COVID-19 pandemic top, before it briefly broke down to as low as 22.17. So that was a pretty big drop, guys. So we could possibly retest this low right here. So where it consolidated from July 3, 2017 till around January 2, 2019, when it finally broke up to the upside. We could definitely test this area right here, depending on um, how the interest rate hiking goes in the next few months, how inflation is doing. So those are the stuff that you have to take into consideration, whether you're a trader or investor. You just have to take those stuff into consideration. And yeah, the markets are forward looking. So as soon as they are pretty certain that the Federal Reserve might start cutting rates or pausing rates here soon, that might be a good sign for the market. So we might not see these prices um, where we are now. These we might not see them again. So just keep that in mind. So if whether you're short, mid, or long term trader, investor, it doesn't hurt to dollar cost average at our current prices right now. So worst case scenario, I'd say we could retest the 2020 levels again, or even possibly lower if the market keeps going down. Like if uncertainty and stuff keeps rising. So the next thing I wanted to show you today is DXY. So DXY, if we take a look at it from the 6 month chart perspective, as you can see here, long term is going down. The dollar is going down. It's looking like it's already hit its peak here. Um, it's kind of this has been kind of like the local top since like July 2016, as you can see here. So we haven't been able to break out of this top a little bit till last year. And then now it's looking like there's a major resistance there, because that is an inverted hammer, guys, for the 6 month chart, and that's not really a good sign right there. So I could see us retesting this low of 9.8, and if it bounces from that, then we could be retesting retesting as high as 103.14. But if it does bounce from where it's currently at, we could be retesting somewhere higher, like the a .com bubble top. We could be retesting that. So 115. We did try to go up there briefly back in July 1, 2022, but it got rejected. And that's what created that bearish inverted hammer. So like similar to January 1 of 1985, we have that big inverted hammer right there. And then on its way down right here, we also had that bearish hammer. So now I think we're now gonna be looking at Bitcoin. So Bitcoin is now going down. It's at 27,986. We take a look at it. Um, Here is the two candlesticks that we've had the last year. So this was back in July 1 of 2022. Then this is current candlestick we have. This whole candlestick 6 months. So if it's gonna pull back, I expect it to retest as low as 20,403, and hopefully it bounces back and retests as high as at least 28,472 again. And if we don't bounce, I could see it going as low as 11,000, somewhere around there. 11,000, 10,000. So we'll see what happens then. These are all just technical analysis, and I'm using the 6 month chart to eliminate some of the noise in the short and midterm. But then for those people who are trading short or mid, we're gonna have to go down lower. So we're gonna have to look at 3 months. So 3 months, you see there is some red going on there. So that that's like an indicator that is telling us that there could be a trend change. So we could be we should be expecting some kind of pullback here soon. So I wouldn't be surprised if it goes to as low as 21,000 in the next few months. Um, and then if we go down to 1 month, gonna gonna start looking like that. So we have 1 month right now that's red. We haven't had red in the last 3 months. So we've had like some consolidation for the last 6 months here. So we bottom out at like around 15K. So now if you're trading short you're gonna have to look at 1 week. So 1 week, every week anything could happen. So right now we're consolidating for the last 3 weeks, similar to like up here. We've kind of consolidated for like 5 weeks. So maybe give it another week or two. And if it seems like we're not gonna go higher in the next week or two, then I probably hold off buying at a lower price. So now we could take a look at 1 day. 1 day is showing us this. Without my indicators, it looks pretty plain, right? But with the indicators here, you can see that these lines here connects to all the tops we've had since we've been going down, and all the other green lines, those are resistance. So we're currently trading above this 26,000 resistance for a few weeks now. And if we're gonna go higher, I expect it to go as high as 31,000, but we haven't really been up there since last time we were up there was back in June 9 of 2022. So if we're gonna pull back, expect it to at least hold 24,133 in the near term or midterm. Um, major support would be 21,274, because if we break below that, then that's gonna invalidate this breakout zone we had here. So yeah. that could possibly send us lower to as low as 18,000, between 15 and $18,000. Okay, so now that's pretty much a near midterm um, chart right there. If you want to go lower, that would be considered day trading or intraday trading. Even I don't really do that. I just like to I like my bigger swings than day or intraday trading. I guess you could say I'm more like a swing trader or momentum trader or um basically if you had bought down here, this would be considered a big like a really profitable big swing. So like from 19,000, if you had bought down there and sold up here 28,000, oh my gosh, you would have made so much money already, depending on how much you bought. So so now wanted to show you how Dow Jones is looking like the near term. So same thing here. Um, as you can see, you notice something here. We've been hitting close to that trend line for a while now, since we've been on a downtrend and we haven't gone past the trend line at all. And the top seems to keep getting lower and lower over time. So that's how you know it's pretty bearish. And same thing with NASDAQ here. NASDAQ just recently broke out that trend line, but it is still trading below uh, the 13,788 resistance, which we were able to hit like back in August 16, 2022, or almost hit it actually. But yeah, the last time we officially hit it right here back in this April 21 of 2022. So we're gonna go up. I could see us going as high as um, 13,788, and then that would form a double top, the near term or midterm, which could send prices lower. Actually, we might even break this bottom right here. Worst case scenario. Then now take a look at S&P 500. S&P 500 um looking like it's hit strong resistance point. So um see where it goes from here, but we do have a golden cross right here. So if we're gonna have a pullback, expected to be able to hold 4,008, somewhere around there. Um, yeah, somewhere around here. As long as it doesn't cross below these um EMA lines here. Then lastly, let's look at the dollar. The dollar, you can see that is near term or midterm triple bottom. So I don't know if it's gonna bounce back up or we're gonna keep going down and down. Yeah, we did have 100 as a major support back in February 1, 2023. We'll see if it's able to cross below 101 and hold 103. Basically, it just needs to hold between 100 to 101 as a major support. If not, we're gonna go lower. And um, if you haven't yet seen my previous video, the DXY and stock and crypto markets have inverse correlation. So when the dollar is going up, that's usually bearish for the crypto and stock market. That usually sends the prices lower. But when it's red, like what we've had here, the stock market and crypto markets are usually going up whenever the dollar is weakening.